Do those too.
All right, big tech smashed their earnings on Thursday. Google, Microsoft, Amazon, and Meta all reported. I don't know why they do this on the same night, folks, but they do. And performance was spectacular. It was great. However, the CapEx announcements were really the story here. Let me just cue this up and show the chart. $725 billion in CapEx guidance in 2026 from but 4 companies, Amazon, Microsoft, Google, and Meta. Amazon leading the pack with $200 billion, $190 billion each for Microsoft and Google, $145 billion for Meta. You add Grok, you add OpenAI, and some other players to these plans, and we haven't heard from the new Apple CEO yet, but he's going to be taking over, and he's going to have some plans here, I'm sure. We are going to see $1 trillion in build out over the next year. I don't know if this is even possible, but this is all being driven by AI and cloud computing. Google Cloud, which includes the Google Suite, that grew 63% year on year. Let that number sink in. 63% on $20 billion in revenue. That's in a quarter. Microsoft Cloud, that includes Azure, Windows Server, SQL Server. They bundled some things together there to get the number to go up. That grew 30% on $34.7 billion in revenue. Amazon Web Services, the original cloud, that grew 28% on $37.6 billion in revenue. That's a bit of a pure play, just counts Amazon's Web Services. Obviously, these are all moving to neo clouds. These are all serving AI jobs and tokens now. They have a massive customer base, and the customers from the smallest startups all the way to the biggest frontier models cannot get enough compute, and it is going to the bottom line. But this is shrinking Chamath cash flow massively. These were free cash flow machines, the largest money printing machines in the history of humanity, but they are giving up on free cash flow, stock buybacks, and dividends, and the focus on those three to invest